Hey everybody, my name is Joe Bladek. Welcome today with Sam Thompson, and we're here for Canadian Mortgage Weekly, Canada's weekly video mortgage news podcast. And today we're joined with Sam Thompson. We're going to be going into the five reasons to go variable today. So Sam, really looking forward to chatting about this with you. I know variable rates have been really popular, and as we're discussing them with clients, they seem to be popping up quite frequently during our conversation. So these five things are going to be a really good list to look over.
Yeah, absolutely. I think the amount of meetings and conversations we've been having with clients has been, much higher than it has been in the past. I think, with fixed rates as low as they were with COVID, no one was thinking about variable. But now that we're seeing fixed rates rise and that, we've had a couple rate hikes, I think there is a lot of clients that have questions and are maybe unsure about, how the variable process works or, sort of what the advantages are for either. So we have some awesome points for today.
Yeah, absolutely. So launching into episode 77 today, we got point number one, the first reason why someone would want to go with a variable rate mortgage instead of locking in. And that is that life does happen. And there's a lot of mortgage brokers that I know that say the same thing and preach the same thing, and that life does happen. Statistically, fixed mortgages are broken about at the 3.5-year mark into the 5-year fixed mortgage, right around that mark quite frequently. And just to have that flexibility of, if you need to access your equity for whatever reason, if you have a lot of debts that have come up, having a large penalty to break that mortgage on the other side could prevent you from putting yourself in a better financial situation. So by having that variable rate mortgage, you may have a fluctuating rate, but Sam, it really puts clients in a position where they have they have a better access to their equity by not having to have a large penalty from an IRD interest rate differential.
Yeah, exactly. I mean, this is one of the key points that we also try and hammer home at our first time buyer seminar is that, obviously you're not forecasting breaking your mortgage when you're signing that initial term. But again, as you're saying, many times, life happens. It's circumstance that sometimes is out of your control. And that variable rate penalty is quite a bit softer and way more manageable for, I think, a lot of homeowners to kind of weather if they do need to break their mortgage, and that's the only situation available to them.
Exactly, Sam. I know personally I've seen penalties for myself when I broke a fixed rate mortgage in the past in the 5 figures, and that was really surprising and also really large at the time, and that was years ago, and I'm seeing penalties like that still on fixed rate mortgages. So yes, number one, life being flexible, keep your mortgage flexible. And again, it's something that a lot of other brokers teach that I really look up to in our industry, and that is just having that flexibility is really key. The second thing, number two, Sam, this is a good one too, and that is that, fixed rates are just a lot higher than variable rates right now.
Yeah, I mean, if you're looking at the variance of what today's fixed rates are versus what the current variable rates are, I know that some banks are offering some pretty competitive discounts. Being able to save on interest on those payments, especially, early on in the process, it can have some really lasting effects when you factor it out over the life of your mortgage, right?
You bet. That's right. It really can, because when you're taking a fixed rate right now, the benefit is you're not going to have a change in payment and you're not going to have a change in interest. And that amortization schedule that the lender prepares for us will not change. And you know exactly where your money is going for the next 5 years. However, that's quite a large cost to pay for that stability, because variable rates right now are quite a bit lower. And because of that, what a customer could do is, instead of taking a fixed rate at around 4.5%, they could take a variable rate at around 2.5%, plus or minus. Obviously, rates change every day, but that 2% in savings, you could put that, you could either reduce your payment, or what I sometimes recommend is keep your payment at what the 4.5% would be.
Mhm.
and use that extra room just to pay down your principal that much faster. You're going to be so much ahead. And then when the rates do go up, you can take advantage, and you've already raised your payments, so you've already done that, and you can
Mhm.
not bring your payment back down after that.
Yeah, it's a really efficient way to make the most of that low interest.
Mhm.
I mean, just a straight comparison, as of approximately today's rates, it's about over $200 in difference when you're factoring in that 2% jump from a fixed to a variable. So even if, like you're saying, you had the cash flow to just keep that extra 200, and so on your variable payments, you're only paying down your principal that much more.
Absolutely. It really compounds over the term of the mortgage, because that mortgage is going to run for sometimes 20 to 30 years. So paying off that principal faster at the beginning really helps speed up that whole process. Right on. So we have two items now. So for all our fixed rate lovers, let's get into number 3. And this is a little bit of a long-term outlook on the variable rate, but taking a variable rate today, it's going to be lower than the fixed rate. We are also accounting for the fact that rates probably will go up at the next Bank of Canada decision on June 1st. Could be a double rate hike of 0.5%, could be a single. And Sam, there's another announcement, I think July 13th. Not sure if we're going to see another rate hike, but you and I, we were just at a big event down in Toronto there, and they actually polled all the mortgage brokers in the room, all these mortgage brokers that are there, to see what we thought was going to happen. Let me just take a look at that as well, as to give you all that information, because we want to make sure we're giving you good information. So June, and then once more this year, was the going answer that 47% of mortgage professionals thought once in June, and then once more this year would be a rate hike. But the reason why I'm saying that is we might have that rate hike, Sam. The rates might go from 2.5% to say 3.5%. They still will be lower than the current fixed rate.
Yeah.
Then what we might see is the rates could start to fall back the year after, perhaps even more the year after that. We don't know, but number 3 would be taking advantage of that future possible prime rate drops.
Yeah, it's true. I mean, we had seen that even, as we entered into COVID, and we saw all of the rates were plummeting, right, on the fixed side as well as the variable side. And we had seen a lot of people breaking their mortgage to secure a lower rate. And again, if you're a client that's in a fixed rate already, to take advantage of that, you do have to go through that penalty process to switch to take advantage of those future, possible rate drops.
That's right. Exactly. With the variable rate, you could still even refinance at a very low penalty to take advantage of a better discount throughout your term. So, yeah. Okay. Looking at number 4, another flexible option here, and that is if you at all need to sell. And keep in mind, we're also in property investor month. So if you're a property investor, you might have a property where your tenants have just left and it's fully vacant. If you're locked into a 5-year mortgage, there will be a large penalty now to sell that property. Whereas if you have a variable rate penalty, it's only going to be a 3 months interest rate penalty. So a lot more flexible if you need to exit the market with that rental. Or if you have a personal home, even, you have a lot more flexibility with the term of your sale date. You don't need to lock into another year. You don't need to line all those things up.
Yeah, those are very good points.
Yeah. Okay, Sam, so we got the 4 items. Now number 5, and that is that you can always lock in later as well.
Yeah, that's right. There is an option to lock in your variable rate. Again, if the the speculation or articles of future rate hikes, and I know that there has been some numbers thrown around of what the rates could end up at on the variable side. You do have the option to lock into a fixed rate.
Yeah, and exactly, the case could be that fixed rates could drop in the future. So if but not really the going sentiment right now, but say on year 2, 3, or 4, while you're in this variable rate mortgage, if fixed rates drop, you'd be privy to those market rates at that time. You can lock in with no cost, or even if you took a variable rate mortgage and then day 2 you were feeling nervous, you could lock into market rates at that time, making sure that we go with the right lender for you if that's something that you're considering. So yeah, that's 5 items that we should really consider when looking at mortgages, and how a variable rate does make sense. Because Sam, we went over it here, life happens, accessing equity, keeping a variable rate mortgage will allow you to do that at a lower cost. You can get some savings by paying the lower rate now, being number 2. Take advantage of prime rate decreases in the future if that's a possibility. That's number 3. Looking to sell leaves you a lot of flexibility on your mortgage, number 4. And then number 5, you can always lock in later. And that's a lot of reasons to take a variable rate mortgage. And if you're interested in one, Sam and I are available to meet with you to talk about this and how it affects your mortgage, and how, if your mortgage renewal is coming up and you're seeing that, you know what, these fixed rates are not for me, perhaps let's take a look at the variable rates. We can set up your variable rate mortgage in 2 different ways, right, Sam? We can set it up so your amortization remains static, and as rates change, your payment will fluctuate. Or we could set up your variable rate mortgage where your payment is static and your amortization fluctuates. So that's the amount of time left to pay off your mortgage.
Yeah, you do have some flexibility and some options when you're looking at that variable rate.
Yeah, that's great. Sam, let's go into that data now that we get into on all our episodes. I know you prepared for us every week, so let's get looking at that here. We got the 5-year bond yield that you usually bring up for us. So where is that this week?
So the 5-year bond yield, yeah, it does. Looks like we've kind of, leveled off here. Let me just get this out of the way.
Perfect.
Yeah, it's sitting at about 2.79. So again, if we're tracking off of last week and looking at it week over week, it has dropped from 2.81%. And you can see it's kind of remained almost steady, but we haven't really left that range. I know we were sitting on the lower end of, about 2.6. Now it's looking a bit higher at about 2.7. Excuse me, at about 2.7. But, the sentiment right now is at least that we're seeing those rates are remaining high. I know that, sort of as we're into a tightening range, it'll be interesting to track what happens, whether, we just remain kind of consistent, or if we do see any sort of a drop. But the growing sentiment is that, fixed rates have been on the rise. They're not quite changing as fast as they have been, because I know for a stint there, we were seeing some banks, multiple times in the same week, they were raising their fixed rate. So it has slowed a little bit, but I think we can expect the fixed rates to remain high.
Yes, you're right, Sam. There was a comment at one of the presentations that we saw earlier this week from one of the lenders saying, I'm not even going to bother telling you the rates right now because they'll probably change in about the next 30 minutes or something like that.
That's right.
And then again later this afternoon. And as mortgage brokers, it can be a very stressful and fast-paced industry to be on top of this and to be talking with clients and rates changing that quickly every day from all these multiple lenders. But we're here watching this and very aware of what's happening with fixed rates. That's great, Sam. So it's going to be interesting to see where this takes from here, because we do see that that curve has tapered off. And we could see either it return back down a little, or I don't know. It's hard to say. We're at that moment of which way is this graph going to go. Let's look at the CDOR rate next here. This is a metric that Sam and I use to determine whether or not a variable rate mortgage is a competitive product at the time, because sometimes it's not. Sometimes it's actually more competitive to take a fixed rate. And this number has slowly been changing. But Sam, what do you think? Is it still a good idea to take a variable based on the discounts?
Yeah, well, looking at the discounts, looking at what the CDOR rate is and its variance from the prime rate, it does look like variable is still a great option and still a competitive option when we're looking. Again, it has risen. It's about 1.447, as you can see on the screen there, up from last week's, 1.38. So it is rising, but at a very slow and gradual process. So again, when we're factoring in, what its variance from prime is, the variance is still under 2%. So we are seeing, it is looking like a strong option. It looks like it is a favorable option. Again, despite the articles or the market suggesting increases in the variable rate, this partnered with the variance, from variable to fixed, definitely indicates variable is still a great option.
Okay, that's great, Sam. And that goes along well with our episode today of 5 reasons why someone should consider a variable rate mortgage. Because we don't want to suggest it if it's not really a competitive option. So glad to see that the spread is still fairly wide between taking a fixed and a variable. I think the next item we're looking at here is the next Bank of Canada rate announcement. And that is something that's really being talked about here between my clients and your clients and all that. And that's that we got this new rate announcement. We just talked about it at our Verico meeting earlier this week. When's that happening, Sam?
Yes, so the next rate announcement is going to be June 1st of 2020. It's just 2022. It's just a few weeks away. And again, it'll be very interesting to see what ends up happening. I mean, I know that a lot of people were on the fence with their last rate announcement of, if there was going to be a change, if it was going to be a supersized one. And we did see that supersized, 0.5% increase. And again, there's been lots of articles indicating that we could see that again. There could be a back-to-back supersized rate hike. So we will have the pre-rate show on the 1st of June to cover off, what the market is saying, what different articles and economists are saying, and then most importantly, covering that announcement live as it happens.
Fantastic. Yeah, really looking forward to that with you, Sam. I always have a good time announcing, what's happening there, because our clients are looking to us for that information. So the quicker we get it out, the faster our clients can make their decisions with what they want to do, with whether or not they want to lock in or anything like that. So, so really excited to see the rate announcement. It'll be a great way to start off our spring as well, and our next series, which I'm really pumped about as we finish off property investors this month. But let's look at the next item here, and that's the national house price average. And I know that we've been trending down this last month.
We had seen, the average for March taper off from what we were seeing at that super high, 816,000 was the average for February. We did see it decrease to about 796,000 for March of 2022. And they haven't released the data yet for what we had seen in April. That's likely going to be coming out next week. But I think if, what we've been seeing on the market side is any indication, we could see it, maybe even soften just a little bit further. There's been a lot of factors in this, way more inventory. I've been seeing, for sale signs everywhere. Yes. Now that the weather's nice enough to, get out for some of those longer walks, still seeing a lot of those for sale signs.
We are seeing some of those for sale signs and listings taking a little bit longer to stay on the market. We're seeing sellers be a little bit more, they're expecting the offers to come in over list price, but the buyers are expecting the prices now to be under list price. Buyers are being a little bit more picky too. They're having the ability to do home inspections and actually do proper inspections, actually, where before it was a lot of buyers were just skipping the home inspections. I think this is more of a balanced market, which is really good for both buyers and sellers, but unfortunately it is a little bit softer. I mean, I do see that last year it did soften throughout the spring and summer. and then it did go up again in the fall. So we could just see that same pattern repeat itself all over again, as it does every other year. But we'll see, Sam, should we? We'll keep an eye out this. We got our new data coming out next week for our national house price average.
Yeah.
Great. So as of right now, just to go over some of the data to buy the national house price, the average house in Canada, as a first-time home buyer with the minimum down payment, that family income would need to be approximately $165,000, and the minimum down payment plus closing costs would be around $55,000. So quite a bit of change there to get in the market these days. And I think that's why we're seeing a lot of times, not only 2 people on title anymore, but we're seeing a lot of times 3 people on title, or even 4 people on title, just to help get them in the market. And that's a very common thing. So if you're a first-time home buyer watching this episode, talk to Sam and myself, because we can get you into the market with help from a co-signer, and then that at least will get you into the market in a way where you can get into that house today instead of waiting for the prices to drop or something like that in the future.
Exactly. Yeah.
Yeah. And with prices dropping, this could be a good time to buy a house, because, if the pattern does repeat, the prices could be just in a sale moment right now, where houses are just on sale at the moment. And
yeah, that's a really good point.
Especially there's a few TikToks that we've seen, Sam. There's one specifically that you and I watched on Monday, I think it was, from a Toronto real estate agent, talking about how people were actually walking, like the market has softened so much that people were walking away from their deposits.
Yeah, that is, something that I don't know if I really thought I would ever see, right? When people are making these offers, they're making that commitment of a deposit. But to see that in some cases, losing the deposit is less of a loss than what the, home value has dropped to, is definitely something to take note of and to keep in mind.
Yeah, it is. And it's not that should be a scary thing, but it should show that that is showing that prices did soften a little bit, because we're seeing some people take the loss on the deposit. And they're saying that the loss on the deposit is less than the loss on buying the house at the value versus what the current value is. Anyway, keep in touch with Canadian Mortgage Weekly. We'll be covering these stories here weekly as we go through everything together. And especially on next episode, as we start to finish off Property Investor Month, we got a pretty awesome episode planned next week. It's a topic that we get questions on a lot, Sam, and it's something that is possible. So Sam, next week, let's talk about how people can buy an investment property with no money down.
Yeah, that's definitely a hot topic. It's definitely something that we get asked. So I'm really excited to cover that information and get to share, a little bit on that with our viewers.
Yeah, it's a big way to buy investment properties. A lot of people have been doing this over the last few years during COVID, buying a second property, whether it is to run an Airbnb or a rental property or just as a second home office. There's a lot of reasons why someone would want to do that. And what we're going to be talking about is just one way that you can do that as a current homeowner. You can buy your second property without any money down. So keep an eye out for that next week at 11:30 for episode 78. And that will feature Sam Thompson here. Sam, he's a mortgage agent that's been with Mega Mortgage now for over 2 years. And, Sam, we were just talking about this the other day. You started just before COVID hit. So
yeah,
we were in the office for a few days, and then all of a sudden you're not in the office for the rest of the time. But now we're getting back out to these industry events. So it was great to be out there. And you were originally from Ottawa. Always great to have you on the show, and the data you put together is always very valuable. So thank you.
Awesome. Yeah. Thanks for having me on today's episode. Yeah, definitely. It's been a unique experience starting again a couple of days before everything shut down for COVID. But it's great to be a part of this team. And of course, on our team is Joe Bladek. You have been in the industry for over 11 years as a mortgage broker, servicing all of Ontario, but currently living up in Aurelia with your wife and 2 kids. So thank you so much for having me on the episode and for all of your insight. I know that you're quite well versed in investment properties and how to structure all that. So your input is really awesome to have.
Thanks very much, Sam. Thanks for the kind words. And yes, for all our viewers out there, don't forget to like, comment, follow, share our videos. Send us a private message if you have any ideas for us, or leave us a comment below if you have any comments for us. We'd love to hear from you. And keep an eye out for our next episode here of Canadian Mortgage Weekly, Canada's weekly video